Hello everybody, this is Toni Turner and welcome to the market now as of Friday, November 11th at the market's close. Before we get started, please know that we at ToniTurner.com are proud to honor our veterans, and we thank each and every veteran for your service. God bless. Now on to the market. Global stocks rose today for a second day on hopes that signs U.S. inflation is cooling means less aggressive interest rate hikes from the Federal Reserve, and that's an outlook that has the dollar facing its biggest two-day drop in almost 14 years. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. And we do this because, and of course this is the ETF that follows our S&P 500 index, we do this because when the market is moving higher, as it did the last 2 days, 3 out of 5 stocks will follow it higher. In the case of it moving lower, 4 out of 5 stocks will follow the S&P 500 lower. So this is kind of our guide to see, to help us make decisions when we're trading. Now the SPY closed today at $398.51, or about $39.85 on the S&P 500 itself. Now the SPY today closed 17% below the SPY's all-time closing high, which was way back here in January, on January 3rd at $477.55. You can't see that on this chart, but that's what it was. So 17% below the all-time high means we've climbed out of that bear market territory below 20%, and now we're just climbing into bull market territory. We are looking here. We know that the market's come down. We knew it rose in August. We know we talked about that and said, can it get over the 200-day moving average, the black line? It could not. We can even see kind of a head and shoulders here, top reversal pattern. And then with that, of course, the SPY came down to this low here, which was interesting. This is the October 13th low. The market gapped down to open at $348.11. And of course, right now, bulls are crossing their fingers that the market, from what it's doing now, does not return back down to this 348 low. That is key. 348, actually 350 and 360. These are the lows, key lows that are important for the SPY to stay above. So speaking of gaps, we know that the market gapped up from that low, moved up higher over the 20-day, the red line, the 50-day, the green line, backed off and consolidated. Then in the last 2 days, Thursday, yesterday, and Friday today, the market moved higher. So it gapped up Thursday morning right here on the CPI report, Consumer Price Index, and it looked like inflation wasn't quite as bad as it has been. It gapped up on Thursday morning, opening at $388.05, and notice that it did gap up over the 50 and the 20-day moving average. So that's a good thing. Then it gapped up again today at the open and closed again at $398.51. Now, that's the good news, all right? What we need to be careful of here is many stocks followed this pattern here. Many stocks gapped up dramatically yesterday morning Thursday morning on the CPI news, and then kept going. This is a pretty predictable pattern here. What you're going to want to remember is that traders take profits, especially like this. Also remember that the gap up and this following candle, wide candle, there is signs here of short covering. A lot of people were short the market when this happened on Thursday morning. So in order for shorts to close their positions, they have to buy back the stock that they sold when they shorted it. So there was a tremendous amount of short covering in this gap up and the following move. Not to say it wasn't a good thing, it is. But when you get shorts covering, they're buying, and you get buyers buying, you usually get a pattern, a dramatic move up like this. And today, of course, we had the second move in the sub move. Yes, it's positive, but let's be careful. I've seen it in my 25 years over and over again. It's a good thing, but let's not buy at the exact highs here. Let us see what happens in the coming week a little bit here. So we do want to keep fingers crossed that 348, 350, 360 price doesn't return to that. What do we need though? What do we need to continue the rally from here? We can draw a trend line. We need for the SPY to continue to make higher lows. If it comes down, this is the new low here for the moment anyway. So we need it to continue up, but it needs to stay above the November low at $368.79. So call it 368 if you want, but price has to stay above this number right here in order to maintain its uptrend. An uptrend is a series of higher lows and higher highs. We also have here in the path of resistance, we have the 200-day moving average coming down overhead at $407.15. And you say, who cares? And I will point us to the last time in August that we came up to this 200-day moving average and price rolled over. Doesn't mean it will, but it means that there is quite a lot of price resistance when the moving average is moving down overhead, especially the powerful 200-day. So in the next few days, could we see, maybe not a big down move, but could we see some profit taking? Yes. There are going to be a lot of people saying that the Fed has not yet decided whether it's going to stop raising interest rates and being so hawkish. Another thing I'll tell you real quick while we're looking at this, is this the bottom? I just saw CNBC say that they ran the question across social media, is this the bottom? 60% of the people said yes, 40% of the people said no. So technically speaking, if it rolls over and breaks 378, we're no longer in an uptrend. And for me, that's pretty much all I need to know. So it could take it a while here to get back up and cross over the 200-day. I think it'll probably mosey around here between 400 and 390 for a little while, I can imagine. Just please be careful. We can call it a tradable bottom. We'll take it. But just be careful when you're trading and consider placing hard stops with your broker to limit the risk. Our next chart today, as we usually do, we're going to look at a daily chart of the NASDAQ 100 ETF, which is called the QQQ. Represents a major index in the market, and you all know the QQQs like the top components: Apple, Amazon, Microsoft, Alphabet, Meta, that whole group, and of course they're volatile. Now the Qs, you can't see it on this chart, the Qs made its all-time closing high back here on November 19th. It's way back at $403.99, and today, right here, the Qs closed at $287.96. That means that the QQQ is now trading 28% below that all-time closing high from November. Now, if it's trading 20% or more below the all-time high, then it's in bearish territory, and the QQQ is still in at 28%. It's looking a little better, but it's still in bearish territory. Now we do know, of course, looking back here, and if you remember, I told you that long-term support came in at 260 for the Qs. So the Qs cut it real close here when it gapped down on October the 13th, and everything gapped down on October the 13th. It gapped down to open at $255.16. Now it did rally from there. That's a good thing. Look at how it came back down the second day. But at any rate, it is moving up here. It did move up to just below the 50-day moving average, came back down here and came back down, rallied from there. Yeah, we had the second November 4th low, so it moved up from this low here, came back down, didn't retest that entire low, made a higher low. Now that is always a positive. It doesn't mean that's the bottom, but it's always a positive when price makes a higher low. We know we saw it back in June and July, a higher low. That was a nice little rally. It wasn't the bottom, but it certainly was fun for a while. I think this will be maybe a little more volatile than that move up in June and July. We've got a lot going on right now, and this pattern is already becoming a little disorderly. But again, it's better than we've seen. So what we have to see now, the Qs rose today over the 20-day moving average, closed over the 50-day. That's good. As long as the Qs can stay over that 50-day moving average, and especially stay above the 260 support line, then it will be in some form of an uptrend or even horizontally trading, but that will be good. We want it to stay above that. So we'll take it. And then it does have resistance up here at 310 at the 200-day moving average. So again, this is it's kind of disorderly here. So please trade wisely, and please consider using hard stops on your trades. Finally, for those of you who want to get a little bit into technology in a slightly conservative way, we have a daily chart of the First Trust ETF. I should have put in there cloud. First Trust Cloud ETF, that's what I meant to put. Cloud Computing is what I meant to put, excuse me. First Trust Cloud Computing ETF, symbol SKYY. It has 66 holdings. Top holdings include Rackspace Technology, IBM, Pure Storage, Oracle, and Microsoft. It closed today, as you can see here, at $64.21. Now, the first of the year, you can't see behind February here, but the first of the year, the SKYY, we'll call it the sky for now, was trading at $100, okay? Right around $100 the first of the year. And then it fell down like everything did the first of the year, rallied in March like everything did to above 94 right here. So it rallied pretty hard. Then fell back down and continued. Then it traded in a range here let's move, and then that moved up there, and that moved here, and it broke out of that range at the end of July of this year, moved up in August. Oh, I'm sorry, here we go. It rallied in March to 94, we know that. Then it rallied in August to 79.44 right here. Then it slid south all the way down to its October 13th low. Remember, I told you everybody had a low on October the 13th. Rallied to gap down and gap open at this low at $55. Then rallied again over the 20-day, over the 50-day, fell down dramatically, and stopped here at 55.62. So that was a slightly higher low. We'll take it. And then moved back up here, as I said, to close today at 64.21. If in the coming week the SKYY can stay above the 20-day moving average, it's the red line here, and it's coming in now at $61.04. You can round it off to 61 if you like. If it does that, if it can stay above, and I'm not giving it much room as you can see, if in the coming week the sky can stay above the 20-day moving average, now coming in, we'll call it $61, I may add a small position to my trading portfolio. My initial stop is going to be at $59.75. I'm not going to give it much room. If and when it rises above this prior high right here, and that will be, if it moves up and over $65.75, I will add to my position, and then by then my stop will be a trailing stop. So you may want to keep an eye on the SKYY in the coming week. Finally, please know if you'd like to become a more successful trader, please check out my trader training programs. You can choose from 10 different online trainings like our flagship program, 7 Steps to Successful Trading. Everybody loves that one. And you will also enjoy my simple but very successful trading strategies in swing trading, trend trading. For novices, how to read charts is always good. 3 winning setups as well. And right now, bottom fish like a pro, that is priceless. That's what you want to know how to do. These programs can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on the screen right here, or simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.